Well, thank you very much for having me. And indeed, the share of investors who are bullish on EM sank to the lowest in 2 years since we started the survey in June 2020. And also the net of bullish versus bearish sentiment stand at its lowest. We got cash levels very high. I think it's probably not a surprise because when we conducted a survey late April and all of May, this has coincided with heightened volatility in global financial markets, especially in the equity markets, and all these worries about global economic outlook, weaker growth, high inflation, sticky high inflation, and the central banks all around the world increasing their hawkish narrative, etc. They've been weighing on investor sentiment. Obviously, everything got further compounded by the Russia-Ukraine war and its spillover to supply chains and disruption on certain commodity items, especially when it comes to agriculture and energy commodities. So everything combined obviously caused a rather gloomy sentiment by emerging market investors.
I suppose the big question, and you can ask this about markets right now and about sentiment in EM, is have we reached peak bearishness? What is your sense based on the survey?
It's a great question. I mean, there are some pointers and interesting parts of the survey. For instance, we ask investors every survey, every quarter, what is the current level of risk taking from 0 to 10 at the current juncture where 0 is no risk in EM and 10 is full risk. And then we take a weighted average score. So the weighted average score, unsurprisingly, sank further to 5.2. It was already low 5.8 in the previous March survey, and 5.2 in this survey is the lowest ever. But then when you look at the breakdown, there are a few investors, you might call them outliers or, you might call them the brave ones. They want to take full-on risk, 9 to 10 risk. It's only 6%, but something we haven't seen over the last two surveys. That's very interesting. And at the same time, as I mentioned, the fact that sentiment is its lowest, the cash levels are its highest. I mean, I'll give you this sort of, stat. 33% of the investors have more than 10% cash in their portfolio as a share of assets under management, which was already high in the March survey at 25%, but has gone even higher to 33%, which keep more than 10% cash in their portfolio. That's a very, very high number. So you might argue the bearishness is so entrenched and emerging markets have been pricing in this, uncertain global and domestic economic outlook with weaker growth and higher inflation so long, prices have cheapened, etc. Maybe some investors do believe we have reached or past peak bearishness, which shows up in the survey. A small percentage, but still quite meaningful.
Let's say we have reached peak bearishness or we're hovering around the bottom in terms of sentiment. I mean, over the last decade or so, with interest rates at historic lows in developed markets around the world, we had this search for yield environment, which obviously made riskier assets more attractive. Now that dynamic is shifting, what does that mean for the relative attractiveness of EM assets?
Sure. Well, look, I think we have to dissect here the picture in terms of fundamental and technical arguments. I think the fundamental picture is very clear. It's extremely difficult, really, really very challenging in terms of decelerating global economic activity, uncertainty about the growth outlook of China. You got, inflation still rising in many places. You got hawkish global central banks. Rates are going higher. Liquidity is coming lower. And the war is impacting supply chains, especially for commodities. So the fundamental picture is really not that great. And, based on our views, things are not going to turn around dramatically anytime soon. But then when you look at the technical picture, it's actually very encouraging in the sense that emerging market asset classes across all asset classes like FX, rates, equity, credit, they've been pricing this, very uncertain and challenging outlook for nearly a year. Prices have cheapened dramatically. Valuations are appealing. Positioning is very, very low, especially when it comes to the local debt markets. The outflows we've seen at the onset of the pandemic, they haven't come back, and we've seen even further outflows this year. And then the cash levels, as I mentioned, based on the survey outcome, are very high, the highest we've seen. So I think there's a bit of a struggle and tug of war between really challenging fundamental picture, as you have also described, and an encouraging technical picture in terms of valuations, positioning, cash levels. And perhaps some investors do think, the technicals would warrant a bit of a risk taking. Again, I stress the point, it's not the majority. Majority is still in a risk aversion mode, but we are seeing some signs of some investors who want to dip in.